The age-old question, where to park your hard-earned cash? It's a dilemma that has puzzled many for generations. With so many options available, it can be overwhelming to decide the best place to grow your wealth. You work hard for your money. Every hour you put in, every task you complete, it's all to ensure a better financial future for yourself and your loved ones. So, it's only natural to want your money to work hard for you, right? The idea is to make your savings grow, to see those coins multiply and turn into a substantial nest egg over time. Investing is the name of the game, but the question of where to put your money can feel like navigating a financial maze with so many investment vehicles, from stocks to bonds, real estate to precious metals. The choices can be daunting. Fear not, we're here to break down two popular options: the allure of precious metals like gold and silver versus the dynamic duo of stocks and bonds. Each has its own set of advantages and risks, and understanding these can help you make an informed decision. Which path will lead you to financial freedom? Is it the stability of precious metals or the potential high returns of the stock market? Or perhaps a balanced approach that includes both? It's time to grab your financial map and compass as we delve into the exciting world of investing. We'll explore the pros and cons, the risks and rewards, and help you chart a course that aligns with your financial goals. Get ready to discover which investment strategy resonates with your inner investor, whether you're a risk taker or someone who prefers a more conservative approach. There's a strategy out there for you. Let's embark on this journey to financial wisdom together. By the end of this, you'll have a clearer understanding of where to park your hard-earned cash and how to make it grow. Gold, silver. These words evoke images of ancient treasures and enduring value. For centuries, precious metals have been a go-to investment, a safe haven in times of economic uncertainty, and for good reason. Gold and silver are tangible assets. You can hold them in your hand, a comforting thought when the value of paper money seems questionable. They are often seen as a hedge against inflation, retaining their value even when the cost of living rises. When the economy takes a downturn, gold and silver often hold strong, offering a sense of security in an unpredictable world. But hold on, before you rush out to buy a treasure chest full of gold, remember that even these shiny metals have their downsides. Unlike stocks that pay dividends or bonds that offer interest, gold and silver don't generate passive income. They just sit there, gleaming at you. Storing precious metals can also be a pain. Safety deposit boxes cost money, and large quantities can be cumbersome. And let's not forget the volatility factor. While gold and silver might hold their value over the long haul, the prices can fluctuate in the short term, leaving you with a paper loss if you need to sell at an inopportune time. Now let's shift gears and explore the world of stocks and bonds. Imagine owning a tiny piece of a successful company, or lending money to the government or a corporation. That's the essence of stocks and bonds. Stocks offer the potential for significant growth. When a company thrives, its stock value rises, rewarding investors who believed in its potential. Bonds, on the other hand, are like IOUs that pay you interest over a set period. They offer more stability than stocks and provide a steady stream of passive income. The market can be a cruel mistress. Risks to consider. The stock market can be a roller coaster ride. One day you're up, the next you're down. It's all part of the game, but it's essential to understand the risks involved. Stock prices can be volatile, influenced by factors ranging from economic news to global pandemics. Bonds, while generally considered less risky than stocks, are not without their own set of challenges. Inflation can erode the value of bond payments over time. And if interest rates rise, the value of existing bonds can fall. Finding your financial compass, choosing the right path. In the complex world of finance, making the right investment decisions can feel like navigating through a dense forest without a map. But fear not, because with the right guidance, you can find your way. So which is it? Gold and silver, or stocks and bonds? Each option has its own set of advantages and potential pitfalls. The answer, my friend, is not as simple as picking a side. It's about understanding the nuances and intricacies of each investment type. The best investment strategy depends on your individual circumstances, your risk tolerance, and your financial goals. Are you looking for long-term growth, or do you need short-term stability? Are you seeking a safe haven for your wealth in uncertain times? If so, you might want to consider assets that have historically held their value. Gold and silver might appeal to you. These precious metals have been trusted for centuries as a store of value. Do you dream of owning a piece of the next big thing and riding the wave of market growth? Investing in stocks could be your way to achieve that dream. Stocks could be your ticket to riches. They offer the potential for high returns, but also come with higher risks. Or perhaps you prefer the steady, predictable income that bonds provide. Bonds can offer a more stable investment with regular interest payments. The key is to understand your options and choose the path that aligns with your financial aspirations. Take the time to educate yourself, seek professional advice, and make informed decisions. Your financial future depends on it. A tale of two investors, striking a balance. Let's meet Sarah and John, two investors with different approaches. Sarah is a cautious investor who believes in the power of diversification. John, on the other hand, is an adventurous investor who thrives on high risk, high reward opportunities. Sarah, a cautious investor, allocates 10% of her portfolio to gold as a hedge against inflation. She believes that gold provides a safe haven during economic downturns and helps protect her investments from market volatility. The remaining 90% is divided between stocks, 60%, and bonds, 30%. This balanced approach allows her to benefit from the growth potential of stocks while enjoying the stability that bonds offer. She carefully researches companies before investing and chooses a mix of established corporations and promising startups. This thorough research helps her make informed decisions and minimize risks. John, an adventurous investor, is comfortable with higher risk. He believes that taking calculated risks can lead to substantial rewards and is always on the lookout for the next big opportunity. He invests 80% of his portfolio in stocks, focusing on technology and emerging markets. John is particularly interested in companies that are at the forefront of innovation and have the potential for rapid growth. He keeps 10% in bonds for stability and allocates the final 10% to a speculative investment in a friend's promising startup. This mix allows him to pursue high returns while maintaining a safety net. The power of diversification. Don't put all your eggs in one basket. Both Sarah and John understand the importance of diversification. Like the old saying goes, don't put all your eggs in one basket. By spreading their investments across different asset classes, they reduce their overall risk. Diversification is like having a financial safety net. If one investment performs poorly, others can help cushion the blow. It's about finding the right balance between risk and reward based on your individual circumstances. Chart your course. Take control of your financial future. The world of investing can seem daunting, but it doesn't have to be. By understanding the basics of gold, silver, stocks, and bonds, you can make informed decisions about where to put your money to work. Remember, there's no one-size-fits-all approach. The best investment strategy is the one that aligns with your financial goals, risk tolerance, and market outlook. So, what are you waiting for? Take control of your financial future today. Educate yourself, explore your options, and start investing wisely. The path to financial freedom awaits. Subscribe to the YouTube channel, leave a comment, and share with friends.